All right, here we go. So, thanks for everybody for logging on, and thanks to my good buddy Rob Messenger. You guys know Rob well. I've known Rob. I don't even know how long. Rob and I go back. We go back a long time, and great family from the area. He's a local guy and has been in the mortgage business. It seems like most of his life now. So I asked Rob to come on just to talk about a little bit about what he and his company does. And then one of the key things I wanted you to mention, Rob, was that program that was out there relative to nursing and people that work at hospitals. That I think you mentioned that at a thing I was at with the Upper Valley Board of Realtors. That it kind of I went, wow, that's an amazing program. So I wanted you to touch base on that. So if you could just talk about a little bit about you and how you got to where you are, and start talking about the programs you guys have out there.
Absolutely, Ben. Thanks for having me. Coldwell Banker has been a driving force in my career since day one. So I can't thank everybody at Coldwell enough for sort of helping me in my career over the last 25 years. Um, this November will make 25 years for me. I've worked at local banks, I've worked at other companies, I've worked, self-employed, owning Legacy now for 4 years. We just strive to have programs that meet, every single person's needs. Like we want to be a one-stop shop. We want to basically say, if we can't do it, it technically shouldn't be able to be done. And that's what we strive for every day, is to figure out a way to say yes, and help people realize that dream of home ownership. I have a team of myself included of 8 people. We're right here in Hanover. I think we have now collectively like 170 years of experience in this office. Personally, I am just short of, I think, 1.3 billion in originated and closed loans
Wow.
in my short career. So it's something that I wake up every morning and can't wait to get to the office and help people. I mean, that's what we do. It's exciting. Everybody's a little bit different. Every scenario is a little bit different, and it's always a puzzle that you have to put together, and it makes life exciting for sure. So, um, so with that sort of one-stop shopping piece, everybody always reaches out. Hey, Rob, do you do VA? Hey, Rob, do you do VA? We definitely offer VA. We do a lot of VA loans, and I forget the numbers, but like the number of veterans in our immediate community is like, I want to say it's like tripled. So again, I think that there's going to be more and more of a need for this VA. We have like 5 different providers. Each one does something a little bit differently. We can escrow, we can have a delayed start for employment. We've vetted like 6 or 7 different lending partners for VA. Each one looks at things and has different overlays just to make it a little simpler. So that is one piece that's a phone call that I field every single weekend, is a text or a call. Hey, Rob, do you do VA? So Ben, the program that I talked about when we were at that meeting, that we call our medical professional program. And again, that is something that we've been working on for not quite a year, but pretty close. It is one single loan. It is up to 100% financing. And the max loan amount we actually just increased. And that max loan amount at 100% one loan is now 4 million. So that is for basically licensed professionals. So whether that's a nursing license, whether that's a physicians who have a medical license, a dentist, a psychiatrist, basically anybody in that sort of realm of medical professionals that hold a license in their craft.
So Rob, but let me interrupt you. That must include real estate agents because we are psychologists at the end of the day, and we do hold the license. So we should be able to get that 4 million loan thing, I think. We could probably work around that.
Get me your app, I'll lend you 4 million. Let's go. Yeah. Yeah, so I mean, again, it's a really great product. I mean, the rate has been, you know, 6.875, I think was the low. I think the high point was 7.125. Again, it's a 30-year fixed. And it's a phenomenal product. I have closed, gosh, I mean, we've got to be close to like 8 million, 10 million already. And again, we just rolled this out. So it is a product that is helping, you know, our medical professional community and you know, a lot of excitement, a lot of affordability. We can basically not include student loans. We've got delayed start dates. We've got, you know, a ton of flexibility. I mean, I just had somebody who's coming in. They've got almost a 5.5 month gap before they start their new job, and it's because they basically want time with their family because they've been through residency and, you know, the whole gamut. And their request was, we just want like 2 months, 2.5 months to be able to have time with our families. And we made it work. You know, we're going to have a nearly 5.5 month gap before they start their new job. So lots and lots of creativity. It does take a lot of legwork and a little bit of extra patience timing wise, you know, to vet those scenarios. But yeah, it's a really exciting program for us to offer.
Yeah, that's kind of crazy. And when I heard you talk about that and at that meeting in the Upper Valley, I was kind of blown away. And obviously, you think about, you know, we obviously have a very big presence in the Upper Valley with Caldwell Banker Lifestyles in our office right there in Hanover, and with Dartmouth and all that going on. This isn't, as you said, just for doctors. It is for people that do have some type of a medical license in that field. Um, um, I think we might have mentioned this, or I might have sent an email or asked you this. This is for people that have a license, not just people that work at the hospital, right? So somebody working in the janitorial department, the maintenance department, they could not take advantage of this. It has to be someone with a license. Is that right?
That is correct. Yes. Yep. And again, it's a lot of it is geared towards you know, helping families and medical professionals relocate to our area, right? So if you live here now and you own a property and you are buying a new property, you're actually limited to 95%. So if you are not relocating and you've been here, you know, so there are some slight, you know, nuances that sort of play out here, but for the most part, if you're here, you're renting, and this is your first purchase, and you're, you know, leaving residency and going into your, you know, attending position, 100%. So far, I have yet to run into a scenario where that you know, that nuance has become a problem. Most of the clients that are already living here that are buying, we're planning to put some money down anyways, and being able to put less money down, not have PMI, have flexible terms has been a really has been a big component in, you know, their success.
That's great. Let me ask you a question or two before everybody else wants to ask any questions. What other programs that you may have that are new that we might not have seen over the last year or so? That's one question I have. And then the second question, I guess, is a totally different side, but have you seen anything relative to the rule changes that we're dealing with in real estate, knowing that our forms have changed since mid-July? Have you started to see anything coming in? And you can answer either one, either first or second, whichever you'd rather.
Yeah. I would say that one of the products that we've been using is is that first time buyer, right? So basically somebody coming in that either, and they don't technically need to be a first time buyer. All you have to do is meet the income limit. So the income limits for our area were just increased. It's like $99,916 per month is roughly the new cap for most counties. And so that could be, put it this way, our program allows for, so let's say you have, husband and wife. Husband makes, 9,100, wife makes 9,100. They only need 9,100 to qualify for the new house that they're buying. Our product allows us to not, we leave both of them on the loan app, but we leave out one of their incomes. They now meet this income requirement because, again, that's for our program alone, that's the requirement. And what it does is it waives all those expensive loan level pricing adjustments, or what they call LLPAs. So I just had somebody the other day that, called me up and they were like, yeah, I'm getting a rate quote from 5 other lenders and, I'm roughly at like 6.625. So I pulled it up, I priced it all out. And I was like, I would be at 6 1/8 for you. And they were like, how do you do that? So I explained it to them, and I took the loan in. They're locked at that rate. Again, they saved 0.5% because we have creativity that opens that avenue for them. So those are, that's just one example. That's something that we do every day. We look across, 9 different channels and, probably 40 different products, and we try to mix and match and find the right fit for each individual. The piece about NAR, that has definitely, we've definitely seen some changes. What we are doing is we are basically asking on the front side of every pre-qual letter, what we need to anticipate. And what I mean by that is, is the listing side offering anything? Are they only offering 1%, 2%, 3%? So we are having to embed in our estimates any differences. I mean, I just had somebody the other day that basically had no idea. They had signed the contract, it said 3%, listing agent was only offering 0. And they had another like 8,500, $9,000 or something like that they were going to have to come up with. Well, they didn't have the money. And so I started asking the questions before I sent the pre-qual letter out. And I said, how are you handling this? And they were like, well, we're not, I don't know what you're talking about. I was like, oh boy. So we went round and round and round, and lo and behold, they didn't have enough money to make it work. So we weren't able to send the letter. So they had to shift gears and go to a different property. So it is definitely going to limit the number of buyers is my take on that. We are definitely seeing people that cannot afford to pay the 3%.
Now, Rob, did they give it a shot to make the offer and have asked the seller to pay it and the offer? And maybe the seller told them they're paying 0, but make the offer and, say, I'm only going to get the financing if you do this. I'll buy your house, but you're going to have, you're going to pay my buyer's agent fee. Did they try
They
that?
did. They did. They had like 5 other offers that were already vetted. So again, I don't know that from the seller's perspective that the seller necessarily missed out due to this, but our buyer definitely did. And I think there were a couple of other buyers that once this came to light, the listing agent reached back out to everybody and said, hey, just want to make sure you understand there's only 3% here to be had and nothing on the buy side. So again, it is changing our conversations. And again, I think that is just, it's a normal, like anything, our industry changes on a regular basis. This is something new that we need to now incorporate into our conversations and just make sure that, when we say that somebody is qualified and they're ready to go, that we've looked at every single possible aspect, that being one of them.
Yeah, that's interesting. Obviously, it sounds to me like if that buyer did have their own real estate agent, they didn't do a very good job educating that consumer as to how things really work. And that's what we've been talking about here at Caldwell Banker Lifestyles a lot. And Joe knows this because he's been traveling around the state and talking with all of our agents. How are we going to have these upfront discussions, one with our sellers and or our buyers? And obviously with our sellers, we do think it's still very important to offer some form of compensation to the buying side, because if you don't, you could limit the pool of buyers, right? And we do have to get creative on the buy side, right? We work with people like Rob. Okay, our buyers have limited funds and the seller's only willing to offer X. How can we make this work? Could they put a little less money down? You know, those types of things. So we do have to kind of get really creative with a lot of things.
Well,
Joey?
hey, Rob, right? If this was 2008 though, right? That seller would have had one offer, your person, and they would have figured out a way to work with them. But because
Absolutely.
5 offers, you know, because we're in still a little bit, you know, we're in a seller's market still. It's changing.
Yeah.
But eventually the sellers are going to need the buyers. And we saw, right, Ben, we saw an agent down in Bedford said, hey, I got a $2.2 million listing. And if you bring a buyer by August 17th with a signed agreement, I'll pay you 3% on 2.2 million. So, you know, some people are getting it, some people aren't.
To be honest, my take out of the gate on this was that this is like a minor speed bump, right? It's just a new conversation. It's another box that we have to check off the list when we're, you know, going through our qualifications. I think the reality is that at the end of the day, we all know how to do our jobs. We all know how to negotiate and be creative. And if the deal was meant to be, it's going to come together.
Remember when you went through Dodd-Frank? We
Oh.
were all like, Dodd, whatever, you guys deal with it, Rob. You guys got this covered. You're going to deal with all those changes. And you guys had a lot more paperwork and a lot more checking, and people had to give their, you know, 2 thumbs and a child to get a loan approved, right? Well,
Yeah.
now we're going through it. You guys can laugh at us. You're like, you guys are going through your Dodd-Frank, basically. You know, we got more paperwork to do, more phone calls, more communication. We're
Yeah.
going through those changes right now.
Yeah. And again, we all survived. I mean, it was a speed bump. It was brand new. It took a little time for it to you know, kind of shake out, but it absolutely did. I mean, so yeah, I think we'll look back on it and, you know, hopefully we'll just say it was a speed bump and, you know, it really didn't impact us all that much. And, you know, buyers were able to buy, sellers were able to sell, and everybody was happy. So.
Yeah, you know, I think the things I'm taking away from it is we are having conversations with our buyers and sellers. Agents now have to have more conversations than they ever did. So I think it's a good thing. I think we're actually going to learn more ourselves and educate our customers and clients more. And I do agree. I think it will be a speed bump. I think after the beginning of the new year, a lot of the nuances of everything that are going to change will all get worked out. We'll look back on it and go, oh, remember that? I mean, we made it through COVID, right? And we don't even think about that anymore. And that was a freaking nightmare for everybody back then, right? We almost weren't even in business anymore, right? Vermont sure as heck wasn't, right?
Susan Bedard was in business when they had the MLS books. You went from the MLS, I mean, you went from the book to the internet. Well, that must have been shocking.
Yeah, the internet was gonna do away with real estate agents, right? And then the banking industry was gonna have agents in their offices. They were gonna do away with the real estate industry. And here we are again with some hiccups. And you know, it's just unfortunately, we are now in the day and age where news outlets have everything instantaneously, and everybody has opinions, and they get to share them all over the internet and things of that nature. All right. Any other types of questions that people may have for Rob about any kind of products? John, go right ahead.
So Rob, real quick. So your first time homebuyer program, is there still a restriction that they can't have owned real estate in like the last 3 years? Does that still apply?
So technically, the definition of a first-time buyer is somebody that has not owned a property or been on a deed for a structure, right? Because I get that a lot. People are like, well, I own land. And I'm like, well, you're still a first-time buyer.
Right.
So yes, in most cases, at least one, if there are multiple buyers, at least one of the individuals needs to be a first-time buyer, has not owned in the last 3 years.
Okay.
But on top of that, there's another layer that is income based, right? So if I have a client who comes to me who is selling a house, but makes under certain thresholds, we can get them into basically the equivalent of a first-time buyer program where, again, they are getting reduced mortgage insurance, really reduced interest rates. So again, it's a lot of trying to piece that together between either just one borrower or multiple borrowers where you're saying, all right, what if we do this? What if we do that? How do we structure this so that maybe you can meet some of these new programs?
Right. And then the second question that I have is something that we've touched base on in prior Zoom meetings with everybody, is that when you have a situation like you just had where the buyer can't afford the buyer agency fee, that we understand anyway, that there is a program in New Hampshire that allows them to borrow that money basically from the state as a loan that's interest free, that they don't have to pay back until they sell the property.
Yes.
Is that something in your toolbox as well?
Absolutely. Yes. We have multiple grant programs. We have closing cost assistance programs. We have for instance, New Hampshire Housing just came to us and said, we want to sign you guys up. Why are we not signed up with you guys? And so we went through the whole process, and we now have and offer every single program under the New Hampshire Housing umbrella, which is amazing. I mean, those are some huge grants, first generation. I mean, there's all kinds of awesome programs that are available.
Great, thanks.
Yep.
Yeah, and thank you, John. And John was referring to the New Hampshire Housing. I just had Matt Gallant from New Hampshire Housing on 2 weeks ago. And Matt could have gone on for 5 hours about a lot of the programs. And he's kind of like a Joe Burns in the morning. He had to have had 15 cups of coffee because the kid was there you go. The kid was off the hook. He was great about it. And they do have some amazing products. And remember, people aren't going to New Hampshire Housing to get a loan. They're going to go to Rob Messenger, who's going to use some of the New Hampshire Housing products to get that buyer a potential loan. There are loan limits, as we know, to a lot of their different programs, but I think Matt had told me it's like combined or something under 168 grand, you could get that $15,000 of assistance that you don't have to pay back. It's just like a second lien on the property. You got to pay it back when you sell. All right. And interest free. So there's tons of programs. So Rob, I'm psyched to hear that you guys are hooked up with them. That's going to help a lot of potential buyers, right? It might not help the buyers that are millionaires that are buying lakefront stuff, but it's going to help a lot of buyers, right? Because, like Joe had mentioned once, if you're making 80 grand a piece, those are two pretty darn good incomes, right? Yeah. So I'm glad to hear you're doing that. Okay. Any other questions? Joe, what do you have for Rob?
I have a testimonial for Rob.
All right.
Sure in case anybody rewatches this, but recently one of our agents listed a home and it has 2 kind of bathrooms that have been ripped out. They're not functioning. And the agent had 3 offers on the house, and there was a cash offer and then 2 financed offers. And anyways, when it came down to it, they called up looking for some advice, and we were going through it with the seller. And I said, well, this offer right here is with Rob Messenger. And if Rob, I said, we're going to call Rob and find out if, okay, here's the tricky thing. It was an FHA loan. These buyers want to do an FHA loan. And I'm thinking to myself, I don't think this is going to work. But they're with Rob Messenger. So I said, let's call Rob and find out and tell him, make sure he's aware of this house and what's gonna happen. So the seller has agreed, this buyer's does contracting work. Rob knew the buyer. And the buyer's gonna go in and update these, just get these bathrooms functioning again. The sellers agreed. We told them if the buyer does this, Rob said these are the two things it needs. It's gonna, the rest of it's gonna work out. This guy's super well qualified. And the seller went with them, but they went with them because it's with Rob Messenger. The other, we talk about this all the time, right? It's a great example. This other loan was ABC Mortgage Company. No one ever heard of them. And they were doing also a tricky loan. And I was like, I don't know. We don't know them. We know Rob. And if Rob says he's going to get it done, they spend the time. What they do differently than most mortgage companies is that instead of calling them up and say, hey, Rob, I make $100 grand a year and run my credit score. I've been at this job for 7 years. They don't do that. They get on the phone and ask them 100 questions, have a 1-hour interview. And it's maybe not a pre-approval, but if Rob gives you a pre-qual, it's like most people's pre-approval. They've already spent the time with them. It's not, unless they throw a massive curveball at him, they pretty much know if Rob gives a pre-qual, it's going to work out because his group has spent the time with these buyers. So they're very powerful team because as a realtor, you can count on it that they're going to get it closed. And for our sellers, that's what we want. We want we need the buyer, we need the financing to work out, and we need the buyer to perform. And Rob, when Legacy is involved, it gets done. So that's,
Thank you,
that was a huge thing. And we've seen you guys, turn things around really quick for people when other out of area financing isn't working out, we say, hey, call Rob, and I bet they'll make something happen for you. And I don't know how they do it, but they, can occasionally pull a rabbit out of their hat and get something done really quick when you're under major duress. So they're a huge resource to have. Massive, Rachel DeThomas said as she's learning her new talk to buyers about her buyer spiel. And she said, when you work with me as your buyer's agent, you're getting not only my 20 years experience, not only the 20 years of networking that I built with all my fellow realtors, but my fellow realtors love the team that I put together because I use a local financing, Legacy Mortgage. I use local inspectors. And when they see my offers come through, they know my buyers are going to perform. So having Rob on the team when it's time, it gets it done. Anyway.
You
Thank you, Joe.
You mean not having Rocket Mortgage on your team doesn't work? I mean, what the heck, man? I love when you get buyers that get, oh yeah, no, we're kind of pre-qualified. We've been to Rocket Mortgage. I'm just like, oh boy, you better sit down on the couch. We need to have a little session. One last question I have, Rob, before we let you go. You had talked to me and wherever I was about this topic about desktop appraising. Is that something you guys are still doing? And just give a quick, how does that work type thing?
Yeah. So and it's funny you say that because that's a really good point. So we are in our industry is basically seeing a fair bit of appraisal waivers. So a waiver basically is that the data points in the cloud system says that the house is worth what they're paying for, and the buyer signs a PIW, property inspection waiver, at closing. No appraisal needed whatsoever. For loan officers that are either just don't look, it says waiver at the top, but you have to scroll to like page 8 where it basically says if there is a PDR, and that is a property inspection report that is done by a third-party company. Those third-party companies are slowly making their way into our area. You're talking about somebody who has very, very, very low qualifications. A lot of the property data reports that we've seen are not correct. So we have not been using the PDRs that we're getting. We've been getting a full appraisal only because I want to say like 4 or 5 out of 5 were an issue. You know, they had wrong information. And then now you're talking about this third party person who this is not their full-time job. They are not an appraiser. They are not an inspector. And so again, I think that eventually, I think this will be a really great resource. At the moment, it's just not, has not been perfected. And I've run into this a lot where people have said, you know, put an offer in and said, hey, we got an appraisal waiver. And so the sellers are thinking, great, that piece is done. And then they realize that in fact, they got a PDR. Now they need to send an inspector in, and the sellers are like, you told me we had a waiver. We're not letting an inspector in. So I just ran into that where I had clients call me frantically saying, we technically need an appraisal. They're not letting anybody in. What do we do? And I was like, well, that's on your loan officer, right? They should have looked closer at the findings. Nobody can help you. You definitely need an appraisal, or you need an inspector to go in. So again, my take on that is that we've had a few, and if the property is like pristine, then I call buyer agent, I call listing agent, and I say, okay, look, here's how this is going to play out. Here's what you should expect. Here's what your sellers should expect. Is everybody okay with it? Otherwise, I'm just going to order an appraisal. And we do the due diligence up front to make sure that nobody is left with questions. Does that make sense?
Yeah, thank you. That was great. You know, that's just another reason why we as real estate agents should use people like Rob that we've had relationships with forever to explain this stuff to our buyers and sellers, because people that are from out of the area that we don't know might not know all the correct information. So it is an interesting topic that we have. John, yes.
Yeah, real quick, Rob, on that. So is there a situation where an appraisal or an inspection is not required? Like if they're putting down, 30, 40, 50%, right? Is it something like that takes that off the table? How does that work?
So John, you send me a buyer, right? And you say, hey, Rob, we're putting an offer in this weekend on 2 Main Street in New London. And I say, give me 20 minutes. I go into my system for that buyer. I take that specific property. I run it through basically our 3 different channels. And I can tell you right out of the gate whether or not you're going to get a waiver on that based on your client, your down payment. And then in my letter that I send to you and your buyer, it literally says this property qualifies for an appraisal waiver, value is accepted at the number that, right? And then what I do, or what my team does on all of these, let's say that offer price was $625 and the listing was $625. I am going to continue to run that through those systems till I get to $665, and at $666 I don't get a waiver, but at $665 I do, and I relay that to you and your buyer, and I say, okay, up to this point we get a waiver. Anything more than that, we're going to have to basically either get creative and pay some closing costs of the sellers or whatever but just understand that we have a threshold of this number.
And that's a huge distinction to be made in an offer when financing has to be part of it.
Yeah.
Right. So as a buyer's agent and so forth, that's priceless. Thank you.
I mean, so somebody comes to us, like we just want to bid this weekend on an offer that was, I want to say there was like 7 or 8 offers. And again, it got a waiver. It got a waiver all the way up to $900,000. And we basically kept, it was kind of a best and final, and then it was best and final again, and best and final again, and they ended up getting the property. But the listing agent called me and said, Rob, that waiver piece was the deciding factor, just so you're aware. Yep. And I mean, my clients were super, super well qualified. It was only 20% down. So it wasn't anything, it wasn't anything crazy. But again, I mean, we will have a commitment letter for them probably by, I mean, it went under agreement 2 days ago. We'll probably have a full-fledged commitment. Everything cleared, nearly clear to close if they can get me their homeowner's insurance by probably Monday or Tuesday of next week.
Amazing.
Done. Yep.
Yeah.
So
Good stuff. All right, it's a little after 9:30 and I didn't want to keep Rob too much. Rob, thanks for coming on, brother. It was great to have you. I know the gang that's on the call today really respects you and appreciates everything you've done. And the rest of our members will listen to this because this has been recorded. And you guys know if you have any questions, you can call Rob night, day, weekends, holidays, whether he's fishing or not. He'll answer his phone, right? So thanks again, Rob. We appreciate it. And I look forward to catching up to you soon.
thank you, Ben. Thank you. Thank you, Joe. Thanks
Thanks,
everybody.
Rob.
Bye.
Take care. Have a great day.
Guys.
Bye-bye.
Thank you. Bye-bye.